Thursday, January 30th, market analysis. Stan Ehrlich, good morning. 9:57 California time. And we have a mixed market for a little while now, a few hours, with the stock market indexes. And I cover the indexes first and then go to futures and other topics occasionally after that. So what we have is a rally earlier, which sometimes some did, some didn't, made a bit of a new high for the last few days, which in general was trying to close, if it needed to, the rest of a gap or close a gap. It hadn't done any of it, maybe, that is above the market. Some have closed, some have not. We'll see in a minute. Next, it just died and came all the way back down to around unchanged, a little bit lower on the day. And right now, you can see that we're up about 15 or a point and a half on the SPY terminology. So no big deal at the moment. I think we have a lot of problems around today's high, which is around yesterday's high, which is around the high of the previous day, which is around the high of the previous day. So the last 4 days, including today, this little resistance area, and I'll zoom in for you a little bit here. That would be the high of Tuesday, Wednesday, I'm sorry, Monday, Tuesday, Wednesday, today, Thursday. And you can see my little blue marker is the equivalent to the current tick, current price, tiny bit higher for the day. But we have trouble. Now, it did basically not close the gap on this E-mini. Having a gap on a 23-hour market is rare to begin with. It has to happen basically over the weekends, which it did. So that's the problem. Now, we may still close the gap. That's not out of the question, but I still think it's topping out. I think we're in the process of rolling over, and my next expectation is not a new high above the January 24th high, but making it below the low of Monday, which you'll remember was a huge down day at one particular point. And the market came back to a close around the middle of the range, a little above and below, depending on the index. And then climbed Tuesday and Wednesday, we dropped off after making a new high. Today's rally on the E-mini is not higher than yesterday's high and came super close in that little zone. It's not a resistance area. I'm just highlighting where the gap is. So part of the gap is closed. Is that it? Is that all that's going to happen? Well, sometimes that's true. Gaps are almost always closed completely. As I like to say, they're like a black hole in space. They tend to suck the price action back into the gap area. So this did, so to speak, but didn't finish the job. Is the job going to get finished or not? And if it gets finished, is it going to keep going up or turn down? Turning down is usually what happens. We did get overbought. There is a broad double top formation involved in this possibility here. We have at the rally high last week, testing the previous highs made in late November, early December. Well, let's just say early December. Yeah, first 2 weeks of December. And it couldn't make it through it. And it got overbought. And it stopped cold turkey. And all of a sudden on Monday, boom. So we need to start closing above today's high, if not above the gap area, in order to plow into new historical high ground. I do think that's going to happen sooner or later, but it might take a while. And I do expect some more downside correction, not necessarily breaking this support line, which frankly, in some charts, and I've got it outlined, could be a head and shoulder top, but it doesn't look right at all on the E-mini. The kind of the neckline is drawn in there, and I do have an objective in mind in case things start to fall apart big time. Now let's look at the 1 minute chart. We just finished a break to lower on the day by a bit, popped back to higher, came down again, and now we're back to what, 16 higher, or in SPY terms 1.6. So not strong, just barely up a little bit, and having trouble at these recent highs. Okay, now Spider itself closed basically the gap by getting back up to the lowest lows during those 3 days that completed what I would refer to as a triple island top, or an island top involving 3 days, which is very, very, very rare, and didn't work because islands stay islands, and it just pops up and then pops down again the next day and just goes crashing. That's what happens with island tops usually. And the same thing in reverse for island bottoms. So this did come back, close the gap, and now a little bit more this morning, but again, it's not looking real good. It's lower than where it opened. It's barely higher on the day. And if we can't get any upside momentum going, this thing could start to fall apart pretty good. Next, SPY 1 minute. And, sideways for a couple, 3 days, 2.5. Next, we got the QQQ. It came right up to that triple daily island top. It's still in effect. It hasn't closed any of the gap. Today's high is a new high for the week, but just barely touching the bottom of the gap. It's now back down to basically unchanged. If this does turn down, we'll have a bearish engulfing, by the way, in the other indexes as well. And so far, we did get overbought a few days ago in the spider, and we did get overbought a few days ago in the ES, E-mini, which means, although the E-mini didn't get higher than yesterday's high, the spider did. We could have a red bearish engulfing in the SPY if we get lower than yesterday's low and close lower than yesterday's close. Could happen. Doesn't look very likely at the moment. And back to the QQQ and back to the 1 minute Qs. Now we're looking at the NASDAQ. I think this does look like a reasonable head and shoulder top. The symmetry is pretty good timing wise. The price levels for the shoulders are a little staggered, a little bit higher in the second one, which is just perfectly okay. It's not too close to the highest high, the head of the formation, so people could get away with calling it a double top, which could be correct. Actually, if it is a double top, it doesn't change the downside objective hardly at all. So the results are the same. And the results would be a move all the way down to 18,934-ish because the neckline is almost flat. And we just tested it on Monday, which was a super fast test. And it came back for a couple of days, and here we are about unchanged, having some troubles. A new high, yeah, for the last 2 days, but it's now back to the same closing prices. So watch out. If this thing starts to slip, it could start to slip a lot faster. Okay, the 1 minute chart for the NQ. All right, let's go look at the NASDAQ, the Dow Jones, a bit different animal. Very overbought, has been for well over a week. It did get up to a little bit of a resistance area. I included this in today's chart. It wasn't in yesterday's. It matches the first high over here in 11.1124. And so we bumped against that price level and seemed to have problems for the last 3 days, including today, at about that level. We need to get above, make new high, close above the previous highs in order to get some upside momentum going again. But we're so overbought for over a week, it is much more likely we're going to start to slide, start to slip. Then what do we got? I just can't get myself to call this a double top, but some people might say it is. Maybe. Okay, so YM 1 minute, not showing too much one way or the other, in my opinion. Just thrashing around pretty good. Volatility on the upside in general, by the way. And that implies things going to happen real fast. The Russell resistance area again, new high close for just a few days, but not a new high for a couple of weeks or more. Going to hit resistance if it goes up a little bit more. Could very well stop again. Not quite overbought, and it didn't get overbought a few days ago to begin with. This could be a little bit stronger picture, but I'm still looking, I think, for it to turn down. And the Russell 1 minute. Bonds. Up on the day a little bit, 13. Made a new high for the move up. We are still long from the bottom of the market on January 14th. Our ER1 overnight would be long from about 111.12. Yeah, about 111.5. To be very exact, just a second. Okay, yeah, 111.16. So it's not on the screen, but the entry for ER3 overnight Well, the ER3 scalp made a lot, well, huge amount of the range of that big up day, but we bought 111.30, the opening tick, the opening low of the day, the low tick of the day, in advance with the formula, the algorithm using ER signals. And the ER3, both scalp and overnight, caught that price on a bid. It opened actually below our bid. That's why we got the trade off immediately on the opening, because it opened below our bid. Now, we're still long. It looks like it's going to have another new high close. It looks like we have a breakout to the upside on Tuesday of this week of a head and shoulder bottom. It's not very big, but the minimum upside objective should be 117.17-ish. And if that's going to happen, we may have a lot of other things starting to kick in, because longer term strategies that depend on longer term momentum, longer term practically everything you mentioned, are going to start to turn more and more bullish, et cetera, from a technician's point of view. So this could be a head and shoulder bottom that really kicks in something else majorly important, and that is a very broad 2-year, year and a half or so double bottom. We got a bullish engulfing ER buy signal on the exact low day, October 23 of 23. Whopper of a move up. Okay, we got a bullish engulfing ER buy signal on the exact low day, January 14th, just a couple of weeks ago. Are we going to have another whopper of a move up? Well, I'm alluding to that. I think that's not out of the question. Will it go down in the books historically as a broad double bottom? I'm going to say yes. I've seen better, but I like what I see, especially for the fact that I got the two signals on the two lows. Hey, there's nothing better than picking the low day if you're a buyer, or getting out of shorts. Next, notes, head and shoulder bottom, having a lot of trouble breaking out. We made a new high by a tiny bit this morning. It fell right back to the neckline, kind of like it did yesterday, kind of like it did with a little less strength even the day before. And when we got to the neckline on Monday, it just plain stopped. Oh, I'm sorry. It went through it a little bit, came back and just rested on the line, basically. And that's what we've got for Tuesday, Wednesday, and today so far. I need to close above today's highs to get this ball rolling. ASAP. Okay, crude, heat, unleaded, then metals, grains, meats. Here we go. We're back in this pennant formation, but we're holding at the line. We're at the line basically at the moment, just a tiny bit higher on the day, up 17. We made a new low, and there's no downside follow through at the moment. I think there's a decent chance it could be trying to turn back up, but we're not oversold. I'd like that very much more, but it's not oversold. So I can't really come to a great conclusion that we're going to not possibly drop off to lower lows. So I wouldn't be doing anything one way or the other at the moment. If you're short, just lower your stops. All these highs are just generally speaking lower than each other, down, almost every day it looks like. Yeah, darn it. Every day since we got overbought. Lower high, lower, and today lower. That's pretty damn consistent. Any system that used the high the previous day or the tiny bit above it as a protective buy stop when they're short, doing awful damn good. Now, we have to wait. Next, heating oil. Kind of the same commentary. Might be trying to bottom out. I haven't got anything to work with. Next, natural gas could have a top formation. I put in the markings for a shoulder, a head, and a shoulder. It did break the line across the bottom, so that's your neckline, and it did it on Tuesday of this week in a very classic textbook manner. Bounced a little yesterday, and looks like it's going to have another new low close today, and might even have an outside down day, which would help me believe that it's going to work a bit lower real quickly. I still think that, but I don't have a bearish engulfing yet, and it may happen. The pattern is working fine. The minimum downside objective 2.4. We'll see what happens. Next, Gold is a new high for the move and got overbought for the first time today and is right near its highs right now. Very strong up day. I would tend to say maybe a little too much, too fast, too quick, etc., because of the overbought. It was overbought a few days ago, dropped off slightly, and then gapped up yesterday. Is that gap an exhaustion upside gap and now we're overbought? That's kind of the combination you might expect. Even the day it does gap up, sometimes you get overbought on that day instead of the next day. We are above the previous high for the whole move, but it really needs to close above that high, which it looks like it's going to do, and then start to keep going a little bit more for a day or two more, and we got a real bull on our hands, which we might. There's a good chance this could just bend over a little bit and come down and close that gap and maybe even come down to 27.33 or even the line. But I'm still basically bullish whether there's a correction on the downside or not. I think there's a lot of support below the market that's going to hold it no matter how much of a dip you get. But the question is that dip beginning? Next, silver into resistance, currently trading smack at the bottom of the resistance area after poking into it probably 25, 35%. And slipping back a bit. We're not overbought. Kind of close, but not overbought. I think it's probably stalling out and maybe starting another slip back down, testing support, testing the previous line across tops. No, I'm not very sure about that. Next, platinum, whopper of a rally, overbought today, jumping into overbought territory and zooming up to a resistance area that I thought might be tested, but I didn't expect it to happen in one fell swoop. And here it is. We might even pop up a little bit more before it's over today. I think this is too much, too fast, too quick up into resistance and then getting overbought. So I'm looking for this to roll over in the price range that it is at the moment and start to slip right back down again. Okay. Next, heating copper. Okay, making upside progress adequately. No rush. Popped up a little bit, new high for a few days, a little higher close for a few days, seems likely, but we got a little resistance above the market. If we're going to get super bullish in copper, you got to start closing above 4.469. Then you got a big move coming, probably. Unless there's another possibility. It gets too overbought in the resistance and then has one more correction, and then maybe up. This is looking a little bit more friendly now. Yesterday we did have a bullish engulfing. You know, I love those bullish and bearish engulfings, especially when you're overbought, oversold with my custom relative strength index. This is ER RSI. ER is Ehrlich reversal. Yeah, RSI, relative strength index. And I learned RSI from Wells Waller himself back in the late 70s and 80s on the seminar circuit. So friendly. Can't get super bullish like the reversal. Wished it had gotten oversold, but friendly. Next. Coming down, testing support in soybeans. Now, I don't care if it breaks this support as long as it doesn't go down too much, and that might be down to 10.16, and it might be not able to go down that far. But somewhere a little bit lower, maybe 30, 40 cents, I expect it to hold and turn back up again. I think there's a possibility we have begun a broad double bottom formation from the first set of lows around August of 24 and the last important low in December 19th exactly of the last year, just a couple of months ago. So the highs that we have had since December have been higher than all the highs and except September. Yeah, September 27th and September 30th. And we got super close. All we have to do is pop in a new high ground on this rally, and you're probably going to make a new high since what? July of 24, a half a year. That is going to be a lot more bullish. And I'm expecting that to happen relatively soon. Soybean oil came back down to support, bounced right off the same price levels as did for 3 or so days, several days ago, and came right back to about the same closing levels that we've seen lately. all I have to do is start to get a strong close, so let's say above yesterday's high, especially the day before Tuesday's high, and then we should be on our way up again. For the moment, I think that's very probable. I'm looking at soybean meal dipping down, doji, inside trading range, not much going on today. Support area has held very, very nicely November, December, and January. What's that? That's January 16th. Yep, that's right. And December 19th. Yep. And in November 18th. So, yeah. Now, I can't really claim this is kind of a head and shoulder because the shoulder, the head, and the shoulder are there. Symmetry's there. Everything's there. But what's wrong? The neckline would slant upwards very steeply and be frankly causing me to say no. If that neckline was a lot more level, I'd be screaming bloody murder, head and shoulder bottom. But this is the feature that has caused me not to draw my little arch marks in like I have for the broad triple bottom and major historical support over the last couple of years. I like that. So I'm calling this a long-term, big, major long-term bottom in wheat that soybean meal. I'm going to say the same thing in wheat in a minute. But I just have to get some strong closes here above, say, 321. Let's call it 322. I hope that happens with relatively soon. Week or two. Next, corn. Got up to a little resistance area and a new high close yesterday in corn, and stalled out for one day today, slipping doji inside day, no reversal, didn't get overbought, could come down just a little bit again, maybe to support again, 477 again, and turn back up. I like what I see. This has fulfilled a minimum upside objective on January 23rd for the head and shoulder bottom. There's your shoulder, there's the head, and there's the last shoulder with that bullish engulfing right smack dab on the low of the last shoulder before the big bull move began. And that was a bad sell signal. If we had taken that, we would have a small loss, not terrible. If you were still long from the bullish engulfing on October 17th, then the system says you don't go short unless you get stopped out of a previous long you still have on the books. So that would have prevented us from taking that signal. But if we had been out and we were flat, we would have gone short and had a small loss. But the bigger thing is the head and shoulder bottom. It's done. It's worked. It was great. Now what? Well, because of the new high close yesterday, I'm still bullish. I'm looking for higher levels, looking for probably 513 and maybe higher. Next, wheat. Double bottom formation on our first low back on August 27th of 2024 has a bullish engulfing smack dab on the low of the break again. Now, unfortunately, we didn't get a bullish engulfing on January 10th, but I think it was a bullish engulfing. I'm not sure. No, it wasn't. It actually was an outside down day instead of a bullish. Bass backwards. That's what I call these things. I'm not sure what to do with them, but it turns out to be the low and not oversold. So up we've gone. We now have today a new high since November 21st. Pretty good. Looks like it's going to close in safe ground, so to speak, above previous highs for the most part, and could go up a bit more, 10, maybe 20 cents in the next day or two. Not overbought yet. I like what I see. I'm, talking about this being a broad double bottom formation, and we're looking at cattle. Well, we finally, I threatened becoming a vegetarian on that rally, but because we couldn't make a new high yesterday and closed substantially lower, I alluded to the possibility that it was starting to top out. I couldn't come to the conclusion there was no bearish engulfing red bear ER sell signal, but it still dropped like a rock today, and I'm expecting to drop off a chunk more, at least to 199. Call it, 199. And there's the possibility of it coming back to 191, 192 area. Next, overbought today for the first time in a while on Miss Piggy. Above the neckline on a head and shoulder top formation, which it had been behaving very nicely until yesterday. I said that if it closed above the neckline yesterday, which it did, I would have to abandon my idea of the head and shoulder top continuing to work. So neckline's going to go. Markers for the head and the two shoulders have gone. And now we're back to a market that got overbought, had an upward slanting channel or wedge, broke out, started to trend lower to support, bounced off of support again. This time had a little bit higher bounce. The big question I have is, will I get a bearish engulfing red sell signal today because we got underneath below yesterday's low and we have not done that yet? Or is it just going to be overbought and start to roll over and come back down? I'm looking for a turn down. And if it can't hold 85.45 on the way down, then we've got something significant having happened. And you're probably going to get to 81. And I just cannot rule out a lot lower than that. And what about the one stock I've been watching for a long time? Yeah, it turned around. Great. Excellent. Excellent. We actually made a new high here for the last few weeks. And the strong current quotes are closing in new highs since the high close on January 16th. So this is the best closing price likely since December 17th, over a month. Well, I like what I see. Okay, let's check on the E-mini and see what it's doing. And we have a rally that is back up to about the high about 9 o'clock California time, an hour and 25 minutes ago. Okay, I'm still looking for it to roll over and come down. You guys have a great day and profitable trading to you.